Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Anyone from YouTube or any of the other channels watching this on demand, welcome. Click on the subscribe button, and then every time I release a video, you will get a notification on it. So you don't have to watch these lives. If you want, you can ask questions, but also if you ask questions in the box underneath, then I will answer them as well on the likes of YouTube or any there. So we talked about Bitcoin going potentially turning and moving around. Now, just to give you a little heads up, there is construction going on next door. So if you hear noises and stuff like that there, I apologize. There is absolutely nothing I can do. I've had a chat to them and yeah, it didn't go well, put it that way. So we were looking at this here as a sort of a head and shoulders pattern. We're looking for this to potentially turn and potentially move to the upside here. Now, for anyone who doesn't see this or understand this, this is an inverse head and shoulders pattern. And what is an inverse head and shoulders pattern? Well, here's one I prepared a little earlier for you guys. I've done some training with someone and we went through it. So this here is a sort of a head and shoulders pattern. So the idea is that we have a normal trend coming down and it is carrying on as normal. And what we'll get at the bottom is a little change. So this is the normal trend that we see. And we're going to add an extra cycle on this coming up. So we have the overall trend of phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. Now it comes back to that point. Okay, so we're going to move all this out of the way. So the ideal scenario is this. The ideal scenario is this to hit here. And when it comes back here, what are we looking to do at that point? We're looking to take a short, aren't we? We're looking for it to hit its head and come back down. Now, taking that trade there for me depends massively on the type of bar that we have. Okay, so it depends massively on the type of bar that we have. So if I draw in the likes of this bar, so I'm going to change the color of it to green. So if we get this bar here, are we looking to take that short at that point if we get that bar there? Yes or no? Answers on a postcard. No, we're not looking to take that there because this is a bullish candle and we're expecting it to continue going like this. Okay, so that's not the type of bar that we're looking for. But if at this particular scenario, we get this type of bar, we get that type of bar, are we looking to potentially take that short? Stop loss will be there, entry would be there. Okay, and we're looking for this to pop down to the downside. Okay, why? Because it's hit its head there once. Hit its head there once, hit its head there twice, hit its head there 3 times, and we're expecting it to hit its head here the 4th time. Now, unfortunately, the market doesn't always work like that. What we see down here is we see a big hard level along here. See a big hard level just down here, and it has come down and it's hit the floor. So what we're now looking at is this phase 2 going up. So I'm going to get rid of all that sort of drawings there. Okay, so in this particular scenario, I'm going to move this out of the way. In this particular scenario, that has gone up to there. So we've broken this trend line. So this trend line is not valid anymore. So it doesn't do what it's supposed to do anymore. So at this particular point, what's happening here? What can we see happening at this particular point? Is there anyone notices here? A break and retest? No, we haven't. There is something going on right at this point, and it's not a break and retest. Previous price breaks the previous ceiling. Left shoulder, right shoulder? No, not yet. Not yet. A new level? Be a little bit more specific, Tyson. Shane, there's a pump going on. Not really. Not really. Higher high? Well, no, because that's not higher. It's the same height, isn't it? So it's not a higher high. I'm a little disappointed you guys haven't spotted that. There. When I put that in, you're all now going, oh yeah, double top. Yes, a double top. Absolutely. A double top is forming. Now at this particular point, we now have a double top. Now Bubbles says change of trend. Bubbles, it hasn't changed trend, not yet. Not yet. Okay. Now we now have a double top. That's what we have there and there, the double top. Now, at this particular point, what would we expect to happen in this market? Would we expect it to continue going down? Would we expect it to go up? What would we expect to happen right here now? What would we expect to happen on this particular trend now? So pullback, break and retest, bounced, retest, sideways, down. Okay, so we have the overall momentum going down, so the trend going down. So we would expect from a double top, whoop, sugar, we would expect it to continue going down. That's what we would expect in a normal market. Okay, that's the general rule of thumb with a double top. So that's what we would expect to happen. Now there's loads of scenarios there on the likes of gold, the likes of silver, double topping. We took the trade in Aussie CAD, it double topped, and we took a short off it, and we ended up getting 1.5 to 1 out of the trade. Okay, so there's loads of opportunities there when we see these double tops, the overall trend continuing, blah blah blah. Now, what's different on the likes of Bitcoin here than what's going on there? So what's a little bit different going on in this market? So we have the double top sort of there. In this particular scenario, it doesn't quite give us a double top. It gives us a break and retest. So what's different in this market? And forget about what's happening afterwards. I'm not talking about what's happening afterwards. I'm talking about just what's happened right there. So what's a little bit different in this market than a normal double top? Anyone hazard a guess? Well, it's not really sideways because we have an overall trend going down, don't we? We have a super trend going down. It's probably one of the best trends we will get. We actually had a trend line on that there, and I was bounce, bounce, bounce off this trend line. So we have a super trend going down. So can anyone spot the difference here at the moment? We are coming into a previous level. Look, this level was bounced there, 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 and there. Now, yes, people will rightly figure out that Henry, it doesn't touch that. Absolutely. But we're coming into this area, aren't we? We're coming into an area. Okay. And as it's coming down, everyone's sort of looking at this and going, this could be a really strong level. Now, I can't guarantee that it's not going to come down and hit that level. And I can't guarantee that it's going to continue going up. But we're into a zone. Now, what this is called, this level here is called sort of a zone. We're in a zone, we're in a buying zone. So we can't, the market doesn't always come straight back down to a level and touch it. It sometimes comes into these zones. And would you say that this here now is a buying zone, in your opinion? Absolutely. Absolutely. We're getting to see a little bit of momentum to the upside here. So this could make a lower low and hit this floor, but it's showing the signs that this could be a potential place to turn around. So now we're going to go back over, I'm going to clear those drawings. So we're going to go back over here. I'm going to go back over here to this. Okay, so we're back here now with this double top. Now, the level is here, and it hasn't quite touched the level. As we can see here, it hasn't quite touched the level. We now know that this is sort of a buying zone. So at this particular point, would we be looking to short the market at that particular point? And the answer is no. Why? Because we're using a little bit of common sense in what we have learned and what we've seen in the markets here. We've seen that there's a potential buying zone down here. And we've now seen this double top. Now we can't confirm what's going to happen next, but if we get this happening, comes down, and then this happens, what does that now form? So our pattern now has completely changed. So we've gone through three patterns. We've gone through cyclicity, which is normal trend. We've then gone through a double top. And now we're into an inverse head and shoulders. Look, an inverse head and shoulders. Now, when we're sort of trading head and shoulders, this here is the left shoulder. This is the head, and this is the right shoulder. This line here is a neckline. So you can call this the inner shoulder, and the inner shoulder, the inner left and inner right shoulder. But the idea of when we're trading a head and shoulders pattern is that we are looking at this from here to here. So a head and shoulders pattern is a one-to-one risk to reward strategy. So the idea is you measure from the head to the neckline. And what we're looking for is when it breaks here. So when it breaks through here, we get triggered in right at that mark. So entry there and our take profits here. So it's a one-to-one strategy. So we're looking at that. This is our entry, and our stop loss is down here, and our take profit is up here. So yes, this is a huge stop loss. Absolutely huge stop loss. And what we're looking for is we're looking for it to move. We're looking for it to turn. So that's a head and shoulders pattern. Now, we can't guarantee how far it's going to go, but the probability is it hits generally the distance from the neckline to the head and then go from there. But again, with the likes of crypto, this could very easily come from here the whole way back up to this top up here again. And that's what we're seeing at the minute, isn't it? So can everyone now see that happening now? So we have phase 1, phase 2, phase 1, phase 2, and now it pops into a phase 1. So that then changes. We now have phase 1, phase 2, phase 1, now a phase 1, phase 2, and now a phase 1. So this is the left shoulder, this is the head, and this now is the right shoulder. So to draw that out for you guys, so we now have this coming down, pop back up here, pop down, pop back up, pop down, and now look, we're here. Now the thing with this one is this one actually had a better signal, and why this one had a better signal is because see this high? This one's actually a higher high. So you can see now the actual momentum is going up. So there's a little bit of more momentum, there's more buyers and sellers in this. So Jonathan has asked a question. So why don't we wait for the price to break through the neckline and bounce off it upwards? Is it because we missed the big movement? Okay, so it depends on how you trade. There's loads of different strategies on the likes of this. There's loads of different strategies. So it literally comes down to you. Okay, so to give a couple of examples. So we're just going to extend that line there. So to give it a couple of examples. So what we could do is imagine we have a bar here, and that's the breakout bar. Now, the one that we've just looked at was our entry here, and our stop loss would have been there. So that's the one we just looked at. So that's what we just talked about. Stop loss and entry. So you're in this market right now. But there's also another way of trading this. See this breakout? So this is a breakout bar. Now, what some people do is see this breakout bar, they trade the breakout bar. Okay, so what they would do is put their entry above the breakout bar and their stop loss below the breakout bar, which means then you're hoping that this now continues in this upward direction like this, and you get a 1 or 2 or 3 to 1, depending on how big this breakout bar is. Now, the problem is that sometimes this breakout bar is pretty big. Sometimes it's pretty big, sometimes it's quite small. So that's one way of trading it. The next way of trading it would be a break and retest, which means you would let this pass and you would not be interested in this at all. Okay, so a break and retest will be the likes of this. So we've had that breakout bar that happened there. We've had another buying day. We've had another buying day. And then we've had this up here. And then what happens is we have our red bar. We have a red bar. And then we have a little small red bar there. And that will be the break and retest. And that's generally how I trade, is wait for the break and retest. So your entry will be there on top of that bar and your stop loss will be there. But remember, it doesn't always happen. So there's the three scenarios. There's one here, which is the normal head and shoulders. You trade the head and shoulders. Number 2 is you trade the breakout bar. And number 3 is you get the retest. And the problem is that with this retest here, it doesn't always come back and retest. Sometimes it just takes off. And then you're going, sugar, I've just missed it. This one here is your trading price action. So the price action, it breaks out, your stop loss is here, and it goes. But the problem is that sometimes you get fake outs. And if you get a fake out, you are stopped out very quickly to the downside here. You're stopped out very quickly if we get a fake out. This one, This one gives you a huge amount of maneuvering because this may go sideways for a little bit. It might come back down, fail to make a lower low, and then pop up. So this one gives you a bigger stop loss, but it gives you smaller reward. This one gives you a better reward. And in my opinion, this one is the best trade, but it doesn't always set up, okay? Now, if you're someone who trades underlying assets, there's no real need to worry about either of these two. If you're someone who trades underlying assets, you just buy the asset and walk away. What I'm talking about here is trading. These two would be CFDs, and this one also would be a CFD or the underlying asset, either or. Does that make sense to everyone there? You have your three different ways of trading it. So there's loads of other ways of trading it, but they're the three sort of simplest ways of trading. Okay, so we don't always get this one. It's the one I generally trade. This one is a much more aggressive, and you'll have a lot of entry day traders trade that, and they'll look to get a minimum of a 1-to-1 out of it. And then this one here is the normal way to trade a head and shoulders. That's how most people would trade a head and shoulders pattern, which means you're in before the second retest. And there's nothing stopping you getting in here, going up and then entering here again with a smaller stop loss. There's nothing stopping you scaling into a position if you're expecting it to turn. So clear all drawings. So that's that. So that's what's happening. That's what looks like is happening on the likes of this. This looks like a head and shoulders pattern. It looks like it's breaking, and we could potentially see a little bit of a run to the upside. Could this be a pattern also influenced by geopolitical news, i.e. Russia, Ukraine, Canada, material law, martial law? You probably have a little bit to it, but probably the big movement here is the announcement in the US. So Joe Biden sort of backed cryptocurrencies over the last couple of weeks in the likes of the US. So this could be a little bit of a bit of good news that we're sort of looking for. Okay, so that seems to be the little bit of good news that's after sort of popping this up. Now, how far that will go, who knows? But again, it looks like it's good news here. Now, just to give you an example, so remember I said a head and shoulders pattern, and we were looking for a double top. We had one right here. We had a head and shoulders pattern right there, didn't we? Now, I say head and shoulders pattern. I meant the double bottom. So we are double top. We had a double top there. And look what happens. Boom, drop like a stone. Now, we didn't have the head and shoulders pattern because, look, this made a lower low than that. So we didn't actually get that. Yeah, so Kevin has just said America is interesting. Polls show anti-crypto politicians are now in favor of voters, and apparently that has changed the approach by the president and the team. Yeah, but so there's a tax bill that he's after coming out that you don't have to pay tax on crypto for a certain amount of time, is to try and get investment into cryptocurrency, trying to get technology running, all that sort of stuff. So that was a bit of good news on it. So it's different. It's strange the way it's all working. But again, it's just a matter of time before this eventually takes off to the upside again. I don't see any reason why it won't. Why? Because this is not an asset that's traded in one country. It's global. So once it takes off, there's a huge amount of people watching this one asset in more so than anything else. So if you go into stocks, you have millions of stocks everywhere. There's loads of stocks. You go into currency, there's loads of currencies. Whereas if you're talking about cryptocurrency, everyone has a little bit of Bitcoin. There's not There's not many people who trade cryptocurrency that do not have any bit of Bitcoin. So you know what I mean? It's the major asset with cryptocurrencies. So it's once it starts to take off, you have a huge amount of people that have it, but also then you have a huge amount of people who jump on the bandwagon. So this asset is hugely down to supply and demands. And once the demand starts happening again, look, I would probably expect it to break these highs. But again, that's just an opinion. All right. Over on to sort of the other ones. Look, if you want me to look at a particular one, just pop it in there. So, but I wanted to go through that in much more detail because it's now after happening. So it's now the Head and Shoulders we talked about last week. It was something that we were looking at. Now the Head and Shoulders is after playing out. It's after playing out in the way we wanted it to play out. Now we had a little bit of a bounce to the upside on our ADA. Okay, if we have a look at it here. So we had a little bit of a bounce to the upside, and now it's come back and it's touched again. So look, there seems to be a few buyers on this level. Now, I don't know whether anyone bought any more of this or anyone who missed the boat in the first place bought some more. We are sort of seeing a little bit of a pump to the upside. You could argue, but Henry, that's a lower high. Yes, it is. Yes, it is. But again, this level seems to be holding quite strong. So am I looking to trade this long term? Yes, but also there are short-term bounces we can trade on this as well between those two levels. If we look at it, it's sideways between those levels. So if you're looking for a short-term trade, buy it off this level and actually jump out of it there. And at one of these points, it will break out either to the top or the bottom. At the minute, we would expect it to break to the bottom, but that is also massively dependent on what Bitcoin does over the next couple of weeks or a month. And if Bitcoin takes off, then we'd expect this and every other cryptocurrency to take off as well. I know last week we talked about Sandbox. So we were looking at this as a break and retest. And it hit its head from the downside. It broke up. And now look, we wanted to come back. But again, look what's after happening. It didn't retest the level. It sort of broke this level. And now look, it seems to be turning again. So it's one of these things that we couldn't really have traded. But again, I know on eToro you can't really trade this because of the FCA. So anyone who is trading this on a broker that you can actually jump in on CFDs, it wouldn't have been something that I would have taken. The break and retest there wasn't very good. Last week, Matic was at a double bottom, if I'm not mistaken. There, double bottom here, and it went up, hit its head, actually came down to say a triple bottom across here, triple bottom, and then sort of popped up, and then again it dropped back down again. So we're seemingly getting into a little bit of a level where buyers and sellers are having a bit of an argument going on here at the moment. So there seems to be a little bit of buying power, and then the minute the buyers take off, the sellers are jumping in, and so there's a little bit of this argument going on. And what we have to do is we have to work out and sit through it and work out which one of these is going to win. Are the sellers looking like they're going to win, or are the buyers going to take over? But we talk about patterns all the time. Anyone doing the boot camp, what's this pattern here? Absolutely, it's a descending wedge. A descending wedge. Look, it's going down. So it's going down. Now, the idea is that this will potentially change. This will potentially either continue to the downside or this will pop. So this is like a coil, a spring being loaded, pushed from both sides, and then we're expecting it to jump out. Okay, so we're expecting it to go one way or the other. Now, Tyson has said something there quite interesting. The SEC has until the 17th of February to make public sealed documents that could shed some light on the SEC's view on XRP back in 2012. Now, that could have a huge bearing on actual cryptocurrency, whether it's going to break out one way or the other. Okay. So that's in 2 days' time. So that could be huge. And if it has found out that that XRP is not a Ponzi scheme, it wasn't trying to defraud the clients, then we could see this massively taken off. Let's have a quick look to the moon. Let's have a quick look at XRP. What is the overall consensus here at the moment? Very tentative. I was expecting to see a little more buyers in here if the announcement is in 2 days' time. But again, if you think that this is going to be good news, there's a little punt on this, isn't there? If you think it's going to be bad news, then you take a short on it. If you're someone who doesn't like to gamble, you stay away from it. But again, since, look, it's been pretty flat, hasn't it? Hasn't really gone anywhere. Hasn't really gone anywhere since all this news, the actual court case, so on and so forth. Okay, so we're going to pop over to indices and stuff like that there now. From Sunday's webinar, we actually had some really good setups. Okay, so if you're not on Sunday's webinar, you need to sort your life out and jump onto the webinars. You go to my website, you click on it. There's a free month there for anyone who is new. Jump in on them and you need to sort your life out, okay? So again, we've now had this pop back down here to this floor. So we've had more or less a double bottom here. Now, look where that level has come from. It's come from there. That's where that area, that's where that level was. That's what we were looking at, the break and retest. So bounce there, look, it's come back and retested. Now, would I have expected people to take that trade? Probably not. Probably not. Why would not expect you guys to take this is because we've had a lower high here. Yes, we have a higher low, but this is pretty flat. It's pretty sideways. We're at an area where I expect this now to go sideways for a little while. I don't expect this to pump to the upside. I don't expect this to pump to the downside. I'd expect this sort of to move sideways like this, and then slowly get a little bit of confidence back in the market. But again, it's just one of these things that we just need to sit and wait. So it's not something I would have expected you guys to take, but anyone that took it off that level, you have a profitable trade at the present moment. We have a look at the S&P. So again, the S&P come back to a level. Now this level was a little bit better than the other one. So we had 1, 2, 3 bounces, but then we've had it broken a few times. So it came back to here again. Now, so again, this one wouldn't have been something that I would have jumped out at for you guys to take. Again, look, what's this called here? Anyone tell me what it's called there? Anyone tell me what that is there? Answers have been wrong so far. It's a double top, bounce and bounce, a double top. So a double top after playing out looks like an M. So there's the M formed and back down. So there's your double top. This is not a triple top because this is not a rejection. This is just a bar. If we went down to the smaller time frame, yes, it would be a triple top, but on this particular time frame, no, it's not. A double top there and there. So that's the M shape. So buying this here, again, I wouldn't have expected you guys to take that. It'd be a very aggressive trade. It's not something that I would have expected, but again, some people will have taken that. The Dow. So the Dow has sort of broken that level we wanted. So there was a trade there and it was profitable depending on where you exited that trade. So again, this level here was sort of broken. So it's not something I would have taken. This was sort of the worst one of them all. So 1, 2, 3, 4 touches, 5, and look, I broke it. Okay, so it wasn't a good setup. This is not something that we would have taken, this one here. Come over onto the German DAX. There was an absolute peach of a trade. Remember we looked at Cardano? 1, 2, 3, 4, 5. Look, come back and touch it again. 6. Did anyone take that trade? I know you took it, Shane. Did anyone else take that trade? Right there. With all these touches here. Now, again, we can't guarantee that it's going to bounce at these levels. But once you see a pattern happen over and over and over again, we sometimes just have to take these patterns. That there was a really good trade. Now, the only question we have on this is how far do we expect it to bounce? How far do we expect it to bounce? Where does the stop loss go? Okay, where does our stop loss go on this? Now, in this particular scenario, this one, so this one would have been a limit order that was put just slightly above it. And what we would do is we check these lows. So see this one? This one seems to be a little bit lower. So we'll put our stop loss just below that low. So that's where I put it. This one actually seems to be the lowest of them all. So put it a slightly below the low of the lowest one. So that means a limit order there, and then this here. So what we have here is we're looking for this to pop to the upside. Now, again, you could go, there's a level up here. So that's where your goal is. Now, it may or may not hit that. You could then do a trailing stop loss behind it. So the idea is we work out where we want to find or what we're looking to do with our take profitness. So if we look at this particular trade, our stop loss was 1.14. And that's where the take profitness was a 1-to-1. If you would have went for a 2-to-1, 2.3, say it was a 2-to-1. There was a 2-to-1. Would have hit target as well. If you're a little more greedy, which are 3-to-1, there's a 3-to-1 on it. Still a little bit more room to go. Did anyone else other than Shane take that trade? Nope. Okay. It's not the end of the world, but again, it's showing you guys that this is possible. These are there. We're in a sideways market, but too busy worrying about war. Okay, Jan, that makes sense. But again, it's trying to show you these things that they happen over and over again. And once the market happens and repeats itself, we see these patterns. And once these patterns happen, all we have to do is make sure our levels are in the correct area. And if our levels are in the correct areas, we can trade from these. We can make money from these. Clear all the drawings. So the German, or that's the German DAX, the French CAC. Now, I wanted the French CAC to come down to the purple level here. But again, also, look what happens. What's that called? A triple bottom. Well done. Again, the trade here was very easy. Limit order there. Now you could have played this a little safe if you wanted, and you could put your stop loss there. And the risk to reward in this is insane. Okay, so you're risking 0.7 of the market. And there's the high at 2.8. So that would have hit 4 to 1. 7 fours is 28. So that is a 4 to 1. Slightly under because it's 0.4 as well. Slightly under 4 to 1. You could have been a little more risk adverse and put that underneath there. So where I probably would have put it. So that's 2%. And it went up to 1.5 to 1. At this present moment, you'd be 1.4 to 1 up on that trade. Now, again, how far is this going to go? I have no idea, but we would look probably to be out of the trade before there. So see that level there? So these two here, they haven't made much of a higher high. So we'd want to be looking right on the body of this top. So I want to be getting out at that particular point if I was looking to take this trade. Now, again, it depends on how aggressive you are on these, whether you took it as a limit order there, or what you could have done is you could have waited for a rejection on that there. You have a low test bar there, and there is the entry either. So on this particular scenario, 1.9, so 2%, and it's 3.4. Now, the problem with the likes of this type of trade here is this is a little bit longer, okay? We are wanting the bounce to continue going for much longer, whereas in a sideways market, we sort of want to trade limit orders rather than stop orders. So this here is a limit order. If we're taking a trade on this one, it's a stop order. So it's inside that red. Okay. So the problem is that once we get these stop orders, we have to be more so happy with the market movements, where the direction is going. Okay, so that's not ideal. And then the UK100. We have this level here, come back and retest this level. Now the problem is the UK didn't give us a great entry. So last week we talked about it coming out to this level. And look, we had a big old selling bar. So then this order here wouldn't have been triggered in. Look, it came down into this level, touched it lovely. Now, again, are we expecting it to drop, or are we expecting it to continue coming down? Now, if you look at this bar here, we have this little wick. Now, what's this wick telling us? Because remember, every bar tells us a story. What's that wick here telling us? So Francesca said, I came late. Is there any chance of listening to the recordings? Well, everything I do will be put up on YouTube. So my YouTube channel is Henry Ward Trading. So just pop that into YouTube and it'll be up by about 6 o'clock tonight. Also, if you came here, Francesca, Zoom will also send you the link for the recording. So you'll have that as well. So either or, but it's probably best subscribe to the channel. You can jump on my Discord either. You can jump in a Discord. If you're in the Discord channel, here's the Discord channel here. We have we have a free chat room here on TraderStream. So we're just talking about some stuff, beginners chat room here. So the guys and myself and Ben are popping stuff up here, or you can jump in onto my paid chat room here. We're talking about stocks, analysis, crypto, Forex, profit share, my announcements, so on and so forth. So there's loads of stuff here that we're talking about in the chat groups here. Okay, so placing trades, looking at it, so on and so forth. So it's either or, you can jump into any of those. It's up to yourself. But on this particular chart, can I add you to the Discord? James, if you're still on there, can you pass over the link to Discord, free chat, the TraderStream one? And Francesca, if you want to jump in on the other Discord, I'm doing a free month for anyone who jumps in. So if you guys want to jump in on it, any newbies, you can try it for a month, and if you don't like it, then cancel it. If you like it, just stay. And it's 47 quid a month after the first month. Okay. So we've had a pullback here, and it's come back into this area. And so this wick here, the wick here gives us a signal to say that this is hit the floor, and now it's potentially changing. So this is what we're looking for. We're looking for these subtle changes, and that's what's after happening here. Now, unfortunately, there's nothing here we can do for a daily trade. There's nothing we can do here for a daily trade, unfortunately. Why? Because the bar is too big. So at this particular scenario, we would jump down to the 4 hour. So we jump down to the 4 hour here, and we'll have a look. So this is this big selling bar here, and then we had this buying bar, and then we had a low test bar with a low test bar with an inside. And then we had what? On this one, we had a triple inside bar here. So this is the consolidation weighting. And if we have that consolidation weighting, it tells us then that we have some stuff going on here. So there's loads of things going on here at this moment. And then we have that set up here. So we can jump in and potentially trade that. But again, it's not the best setup in the world. It's not the best setup in the world. So probably wouldn't have taken this for anyone who was on this. I probably wouldn't have taken this one. Give me a second. So this is the link for one of the free chat rooms. So once you're in there, I'll pop you guys into the other free channels. So there's the link for the Discord. Is there an example of a mini descending wedge on the 4 hour? There is a descending triangle here, but it wouldn't be on the 4 hour. See this here? It's not big enough here for a 4 hour. But if we drop down to the smaller time frames, yes, that would be on the 1 hour. Yes. So this is exactly the type of thing we're talking about. The breakout. So if we drop down to the 1 hour here, we can see, look, bounce, bounce, bounce. Now, would I call this a wedge? Not really. It looks like it's respecting this floor. It's a 1 hour chart, so everything, it's never going to be perfect. But again, look, again, so just to go back to the example that we talked about here on the likes of Bitcoin, there's that bar there. Now remember the second scenario of trading, we were looking at the breakout bar. So a long position, so your entry will be above the bar here. And your stop loss, I've had two of them there, don't I? Delete. And your stop loss would be below the bar. Now in this particular scenario, that is a huge bar. So sometimes these breakout bars are too big. You can't use them. And sometimes they're nice and small. So in this particular scenario, you wouldn't be looking to use that as a trade. Well, you're fine, James. But how we would be looking to trade this is see these lower highs. See these lower highs? You'd put it under one of these lower highs, but then your stop loss would have to go underneath that low. And that would be one of the ways to trade it. Or the final way of trading this then is on that triple bottom. So 1, 2, 3. So this would be sort of the one that I would have taken on this, is the triple bottom and my low below there. So that means then if it breaks out to the upside, then we have loads of momentum. So we're 0.6 and this went up to here. So that was the high right there. So we're just under a 2-to-1 and it looks like it's still going to go. All right, so that's the idea. But again, there's loads of different ways of trading the likes of this. And you have to be, the biggest thing on all this is you have to be confident with that floor. That floor, you have to be confident with your levels. If you're not confident with levels, you never, ever, ever take these trades. And that's one of the things that we have to sort of learn. You have to be confident with levels. If you're not, unfortunately, you will never ever take the likes of these trades. You will only ever take trending stuff. And unfortunately, the market has not been trending for the last, if we go back to Nasdaq here, change it to the daily chart. Yep, 4 hour, change that to the daily. The market hasn't been trending since November, December, January, February. So that's 4 months. So that's 4 months of this sideways movement. We've had a drop, sideways movement. Okay, so we have to now change our strategy a little bit while we're in this market. So there's one of two things happening now. We either stay away and stop trading, or we learn how to trade these other markets. Look, there's a double top. We could have taken that short. There's a break and retest. We could have bought that. We could have bought it there again. All right. We didn't get a break and retest in any of these areas here, but on these smaller time frames, we had 1 or 2 trades that would have taken on the likes of this on the way down. Then we had a double bottom here. Not the greatest one of all, but again, so there's opportunity in these markets when they're sideways. You just have to make sure you're looking at the correct ones. China was another really good example of that. Come back down to level, bounce once, twice, 3 times, and now look, the 4th time. Shane, I think you took this one as well, did you? And I have an order there on that inside bar, whereas I'm assuming it was a limit order, which meant that the profit on this was quite high. Look, bounce, 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 and look, it hit its head and drop back down. It's now a question of whether it will pop back up and break this level, or whether it will go back down and hit this floor again. So that's the idea. We have a couple of scenarios going on, and that's the idea of trading. So oil has continued to run, and I popped up. Just give me a second, guys. So it popped back up, and I went up to a high of $95, which is a phenomenal run on the likes of this. There was a nice little trade there again off this trend line. Is it the best trade in the world? No. Why? Because we're massively overextended. But again, what are we trading? We are trading literally demands here. Our stop loss was 2.2. This went up to just under 6%. So almost a 3-to-1, and it's popped back down here. So we have a new level. Yeah, volume is dropping on oil, absolutely. But again, we have another setup here off that level. So look, we have bounce, bounce, 3 bounces on this level here. And now back over. Is it something I would take? No. Why? Because this trend is massively overextended. Massively overextended. It's definitely not something I would look to take. But again, we have a little retest on that. So let's have a look on the smaller time frame. Is that something we can take? We drop down to the 4 hour. So we drop down to the 4 hour. It's broken and retested. You could say that we have a double bottom here. So is that a trade that some of you guys would take? Entry there, stop loss below it. There. So 2.17. And at the high, you would have had a 1-to-1. Bubbles have already gone through XRP. You'll have to watch the recording. But again, is this a trade that I would take? No. Why? Because it's overextended. Just putting that disclaimer in there is not something I would take because it's way overextended. But again, the momentum is still going up. There's a lot of trend there going on. I'm going to have a quick look at natural gas, and then I'm going to quickly look at ExxonMobil and Oxy before we finish up. Now, this is not something I've taken. Why? Because I wanted to come back to here. If I had come back to this level, I would have taken it, yes, to the upside. But for me, that wasn't a trade. It didn't come back into any levels. Felix, if you're online, did you take this? I know, Felix, you were looking at taking this trade here, and you had some problems putting it in, whereas I'm pretty sure you would have been able to put this trade in. Entry there, stop loss there. You took it based on the train track reversal bars. You do like a little, what would you call it? A little punch, don't you? Two X's, isn't it? XX. There we are. And look at it, it's flying at the moment, isn't it? We're back up now to August 2019 levels. Okay. Okay, so it's flying at the minute. We also have Oxy. Again, that's flying as well. I'm assuming people have Royal Dutch Shell as well. But again, these are the kind of things that are trending well at the minute. But for us to take a trade on this, it has to come back into sort of these levels. That double top would probably be the level for me to come back to before I'd look to trade it again. Come back to there, double top. Look, and there's the retest. I'd have wanted to come back again and then potentially trade it. EV or AZ, I'm assuming this one here. Audra, is that the one you're looking at? Yes. That is not something I'm looking at, Audra. No. it has earnings coming out. Earnings coming out on the 25th. It dropped because of Russia. This is not something I would be in. I'd stay away from it. Anything to do with Russia, anything to do with let it drop, and then once it's hit a floor, once the conflict is sorted, that's when we can jump in on it. We don't have to try jump in and get in the very bottom of them. It's like with China. We sort of waited for a lot of the stuff to go, and then we jumped in. Now, with the stocks we took in China, we're still down 20 to 30% on them. So we didn't get the very bottom, but hopefully now they've stopped dropping. They've sort of moved sideways. So that's the idea, is wait for these things to drop till we expect and we look and we think things are at the bottom. Then we can slowly start buying them up. But no, absolutely not. Look, everyone, it's been an absolute pleasure. Thank you very much. Looking forward to seeing you in on the webinars, and hope you have a lovely evening, everyone. And I will have this up online probably by 6 o'clock on YouTube if anyone wants to rehash or rewatch it. Thanks, everyone. Have a lovely evening. Bye-bye.